for diligently adhering to the time schedules, acknowledging our thought that time is gold.
Friends, some of you must have not received the kit. We humbly request you not to worry. Just keep your receipts intact and you can collect the kit from the branch 10 days later.
PRAKARSH, the two-day national conference is getting featured online on YouTube and Facebook. The web link has already been shared. The QR code was already there on the screen and will soon come again, where you can see the conference live. Abhishek, I was wondering, do you also feel that fellow professionals these days are too busy and tensed?
Yeah, thanks to our agile Ministry of Corporate Affairs that keeps introducing new compliances under Companies Act, whether it is SBO, DPT, DIR or active. I don't know about the corporates, but professionals these days are active yet stressed.
Yes, undoubtedly. Coping up in this era with such a long list of compliance is a challenging task. More so when I refer to the newspaper headlines, I get goosebumps. Accountability of professionals, particularly chartered accountants, is increasing day by day, and we are on the radar of the authorities.
Don't you worry, Shivangi. To address your concern, Professional Development Committee, ICAI, has planned the second technical session of the topic, Changing Role of an Auditor and Companies Act. We are privileged to have amongst us CA Dhinal Ashvinbhai Shah, who is a partner at EY, Tax and Regulatory Service Practice. With great honor, I welcome you, sir, on the stage. May I also call upon the session moderator, CA Nikhil Totuka, and the session panelists, CA Nitin Sharma and CA Anil Kumar Yadav, to kindly join the speaker on the stage.
Friends, please join me in giving our esteemed dignitaries the best cordial welcome with a big round of applause. May I request CA Gautam Sharma and CA Shiv Shankar Gupta to present a green gold and memento to our learned speakers.
I guess the presenters are not there. I request SICASA Chairman Devendra Somani and CA Rakesh Lohia to present a green gold and memento to our learned speakers.
Friends, they say clapping is yoga too. So here wishing you a good health.
CA Dhinal Ashvinbhai Shah is a chartered accountant and lawyer by qualification. He has more than 25 years of experience in advising clients on taxation, exchange control, and regulatory issues. He is an executive member of International Fiscal Association and secretary of ITAT Bar Association, Ahmedabad. He was a Central Council member of ICAI, director of IPA and RVO formed by ICAI, and was a chairman of Direct Tax Committee of Gujarat Chamber of Commerce and Industries. Sir, we request you to kindly address the gathering.
Good afternoon, everybody. My colleagues on the dais, Prakashbhai Sharma, Central Council member, Vijayabhai Jalani, Central Council member, seniors in the profession and dear friends. Let me first thank Jaipur branch and particularly Prakashbhai for bringing me over here. When he requested me, I was wondering that I more do on the tax side, and should I be speaking on the audit side, and that too on the Companies Act. But somewhere in my initial practice of almost 17, 18 years, I did extensive audit of different financial statements, both listed, unlisted, partnership, trust, etc. And with some activity in the institute in 9 years earlier, it helped me to understand what the society the business and the regulators are expecting from a changing role of an auditor. The word audit has not undergone a change from way back to 5,000, 10,000 years back. The audit has remained the same as audit. Expression of an opinion on the financial statement, that whether it reflects true and fair view. That has not undergone a change. When you sign your financial statement for March 19, or you sign financial statement for way back in 1800, it is the same true and fair view or an expression of an opinion based on your professional judgment. So whatever these new terminologies which are using, and I was reading some article, the terminology used was professional skepticism. To my understanding, these are all new age language or a terminology, rather than changing the role of an audit profession principally or a conceptually. It is exactly same what we have been doing for last so many years. But what has changed is the size of the business, which has changed substantially. The complexity has changed substantially. The use of technology has changed substantially. The regulator's expectation from the chartered accountant and the faith which they have on the chartered accountant have increased substantially. And overall, the society's expectation from a professional have increased substantially. Now, we always used to read in our inter and final exams of CA that auditor is a watchdog and not a bloodhound. Recently, one of the Security Appellate Tribunal decision, that principle is reproduced again, that auditor is not a bloodhound, he is only a watchdog. Because what is expected is a reasonable assurance on the financial statements. And therefore, that reasonable assurance on the financial statements, based on the true and fair opinion, is what is expected at the relevant point of time. Because the other challenge which has come up of late, particularly for the valuations, is I do something today, my valuation is done today, but it is tested whether it was right or wrong after 2 years, when the entire economic situation has changed substantially. And therefore, what has changed is only the situations which have changed, but that watchdog to a bloodhound, the line is getting blurred. So I was here at a watchdog, I am here at a bloodhound, I am actually moving towards this. I am not saying that I should be actually a bloodhound. If you become a bloodhound, no businessman will appoint you. The first question is, you are not a CBI inspector or a policeman. But you are coming here to verify the financial transactions which you have undertaken. And therefore don't have the aptitude of an investigation. And therefore there is a new way of practice which has emerged in last 5 years, is the forensic accounting or a forensic practice. Forensic is nothing but the extension of a reasonable assurance of an audit. So what I was here today, what I was doing a true and fair view, I was accepting the documents which are presented to me by the management unless I have a doubt or I have a suspicion on the veracity of the document. In a forensic, I extend my scope of an assurance to say that whether these documents are right, I actually do an investigation and to verify that whether the transactions which have been undertaken are actually undertaken or not, or it is a mere book entries, or it is a circular trading, or it is any other transactions, and therefore my scope of audit is extended to by way of forensic. Under Insolvency and Bankruptcy Code, you have section 41, section 51, section 66, where a preferential treatment or a fraudulent transaction if the industry has undertaken, then you compulsorily have to have forensic audit from a third party, and then that forensic audit report is submitted to the NCLT by the insolvency professional. And what is expected to do, is there any irregularity in the transactions? And therefore what has changed is the environment. With every situation, the environment has changed, and there is a huge expectation from all of us. With this change, the new Companies Act 2013 have substantial increased the scope of an auditor under section 143. The earlier scope of an auditor under section 224 of the Companies Act 1956 or section 228 in case of a branch audit has remained the same, but 2 or 3 important clauses have been added. And one of the clause is on the internal control and financial reporting, the ICFR. Now what is ICFR? If you go back, if you align these ICFR principles along with the auditing standards, the auditing standards requires you that you first do the test of controls, and if your test of controls are okay, you don't further extend test of details. But if your test of controls are not fine, you find certain irregularity in a test of control, then you extend your scope by a test of details. Or other words, you do the control testing, but in your control fails in an audit, then you extend your scope, either there is irregularity or there is a smell that you have certain irregularity which could be in the form of a fraud or certain other situations where you have an expectation to report to the government. So internal financial controls, if I take a simple example, and many of our clients could be a partnership from an LLP or a proprietary concern, basically it is nothing but a maker-checker concept. That if I do particular thing, somebody else should verify my action, so that if I commit certain mistakes, somebody can point out that mistakes. Now in a case of a proprietary or a partnership or an LLP concern, where there are father and son, where there are husband and wife, there are 2 brothers, what is that maker-checker concept? How do you implement? In case of a private limited company, you have husband and wife, father and son as the directors, or 2 brothers are the directors and shareholders, doing a business of 10 crores or 20 crores. How do you establish test of control and test of details? The auditing standards, there is no exemption, whether it is a 2 crore company or it is a $2 billion company. The auditing standards principles are the same. But what is expected from all of us is that in a case of a proprietary small or a partnership firm, what I can do is that I can understand the business methodology, the nature of transactions, and based on nature of transactions and the details, if the proprietor is doing all these, he is doing purchases, he is doing sales, he is signing the checks, he is also doing the banking transaction, he is also looking after the inventory. So there is only one person who looks after the entire business. There is no question of maker-checker concept in a proprietary firm when everybody is done by the one person. But in those cases, what is expected of as an auditor or a chartered accountant, that whether the sales and purchase which he is doing, whether there are reasonable controls. I am not saying the highest controls, bare minimum controls. So if I dispatch my goods and I issue a gate pass, or on the GST I issue an e-way bill or an e-invoice, whether that invoice is actually generated by somebody, whether the goods are actually dispatched from my godown or a premises or a factory or any other location, and whether the goods actually reaches to the customer. Or in case of a purchase, is there actually a GRN receipt or a goods receipt note which is there? I am actually purchasing the goods actually receive my office or a premises or a factory or a godown or a manufacturing plant, and then whether the goods are actually issued for the purpose of production or for the purpose of resale in case of a trading concern. Do we have reasonable documentation to demonstrate that these basic details are available with that particular industry, particular proprietor or particular LLP firm. The second requirement under ICFR, and which has changed in 2018 Act, is that auditor is only expected to do a financial reporting. Now there are basically three types of controls: the business controls, the operational controls, and the financial controls. Now directors are required under the director responsibility statement to report on all the three: the business controls, the operational controls, and the financial controls. Auditor is only expected to report on the financial controls. And therefore, what is financial control per se means that any transaction having an impact on the financial statements, and therefore if there are some irregularities in a certain transactions, or if I was supposed to leave a GST, I did not leave a GST, or I was supposed to do the input credit which I was not supposed to take, and I have taken an input credit, it actually affects my financial statements. It actually affects my income and expenditure, and therefore I am expected to verify those transactions as a part of the audit process. The second change which has happened under 143.9 and 143.10 is the mandatory compliance to auditing standards. Historically, the auditing standards were always the Institute's domain, and today also, under 143.10, the Institute has drafted and formulated the auditing standards. An institute is completely aware of what is going on in the economy, what is going on in the world, and the auditing standards are updated on a regular basis. These standards are now, the government has taken over the powers to notify, but the law says till the time government notifies separately, the auditing standards issued by the institute will continue to be complied with by all the corporates. Now I wanted to touch upon 3 or 4 important issues on auditing standards, and starting with the audit documentations and audit sampling. Now why I wanted to touch upon audit sampling and audit documentation is, let me take a simple and classic example. Some client approaches me and he says that I want to give you an audit. And I give my profile. After giving my profile, he will say, yes, you are very good. You have an experience. Can you please quote your fees? Now the moment client says, please quote your fees, I do not have any understanding that what fees should I be quoting. I either quote 10,000 rupees, or I quote 2 lakhs of rupees, or I quote 5 lakhs of rupees, but I don't have the backup working why I am quoting 10,000 or 2 lakhs or 5 lakhs of rupees. Ideally, what I should have done, I should have understood his transactions. I should have a last year financial statement in my possession to verify that what is the revenue, what is the expenses, what are the nature of transactions, what is the volume. And then based on that, how many hours I would be expected to spend on that particular client. If it is a 10 crore company client, maybe a 10 days or a 12 days work in a year would be sufficient. What would be my cost of the people, the partner plus his subordinate, his article clerk, or the other support staff for the purpose of carrying out the audit of those companies? And then based on that, I should be quoting my fees. And if I quote X amount, and if I want to accept at a lesser than that fees, that's a professional call. But I must know what is the cost of providing services. If I extend the same principle to audit documentation and audit sampling, today what happens in general experience is that I go for an audit and I say that all vouchers beyond 20,000 should be verified. All purchase bills beyond 1 lakh should be verified. Why that 1 lakh limit has been decided, why the 20,000 limit was fixed, there is no basis for that. And therefore now, with the use of computer, with the use of technology, I should have more data analytics. Through Excel, through a pivot tables, at least I should know that if I do a vouching of more than 20,000, in a value terms, I would cover 70 to 80% of the volume. Or if I cover purchases more than 1 lakh, it would cover 60-70% of the total purchases. Now, unfortunately, many times, these supporting documents for sampling, that on what basis I am deciding that up to this amount I should be verifying, those documents sometimes we do not have insufficient. The same principles on audit documentation. I have some issue. The client is arguing that I don't need to levy a GST. I don't need to reverse an input tax credit. I am not an expert on GST. I am not an expert on income tax. Should I be consulting somebody? If I have consulted somebody, do I have a document? I could have consulted my own partner in the firm, but what the auditing standards require, that you have identified an issue, summarize that issue, do a consultation with your own partner or through an external person or an external expert, summarize the discussion, put it on a file, that based on this, I took a view that input tariff was not required to be reversed or was required to be reversed. Now this is and I must admit that everybody of us does this. What it lacks is ultimately putting on a piece of paper. It is not that we are not complying all these auditing standards. We are complying all auditing standards, but when it comes to documentation, we lack to put this on a proper documentation. Similar examples is the article clerk or the people who are doing an audit in our team. I have all the documents, these query sheets and everything is there. What standards require? Have I verified all the queries? Have I verified which is material, which is not material? And finally, I close those queries, either discussing with the staff, either discussing with the management, and ultimately, if an issue arises that there is a non-compliance of an auditing standard, there is a non-compliance of accounting standard, or any other non-compliance of laws and rules and regulation, should I be qualifying a report or it is not material to qualify a report? Now, the third point, all your notes to the accounts, all your CARO reporting, everything you have certain facts and figures. Do I have a backup for this? I say that I have 100 rupee contingent liability. What is that 100 rupees? Is it an income tax demand? It's a GST demand? It's any other regulatory demand or any other contractual liability? What is that 100 rupees which I am putting? I should have a backup papers, and therefore auditing standards actually allows that you are given a 60 days time to close your audit file after the audit is signed by you. And therefore in that 60 days, you can actually close your file from the compliance perspective. The next issue was on joint audit. Particularly in our nationalized banks, in our government audit, and in many other sectors where you have a joint audit, you have an SA 299. Now, joint audit is an acceptable concept. In a large organization, it is impossible for one person to carry out an audit. And therefore, joint auditors sit together, they allocate the roles and responsibility between them, and they ultimately put out in a piece of paper, sign off, and actually conveys to the management that X person will be doing a treasury function, X will be doing advances, third will be doing the consolidation, fourth will be doing the other areas in a bank or in a manufacturing sector. You have 2 or 3 plants, you actually allocate the plant-wise audit, and which is acceptable concept. What I only wanted to convey was that at the end of the day, the financial statements are signed by all the joint auditors together. The compliance to accounting standards, compliance to auditing standards, compliance to rules and regulation, in a case of a bank, a compliance to RBI directions, is a joint and several responsibility of all the joint auditors. In a QRB, where I am one of the members and I have seen that in one of the large listed company, the auditors actually divided even the para number of the CAROs to be reported. So 3 paras will be done by these, 3 paras will be done by another auditor, 3 paras will be done by another auditor. What my only point is that for actual verification of the data, for actually determining that which data is right, which data to be put up into notes, which data to be put up into audit report, which are the data which is relevant for disclosing, let one of the joint auditor continue to do that. But when it comes to compliance to our standards, which is assigned by all the joint auditors together. It is a joint and several responsibility. And just to give you a last example on this, can I create a deferred tax asset on the unabsorbed losses and depreciation? The AS22 says answer is yes, if there is a virtual certainty. Now in one of the company, the deferred tax asset of substantial amount was created. The numbers verification is a role of one of the joint auditors, but whether the other joint auditors should not have verified that there is a virtual certainty or not, and therefore do I comply with the AS22 or not. I don't think the other auditor can go and say that no, it was his responsibility to comply AS22, and therefore is there any virtual certainty or not, that is also not my responsibility. Then I think we are not complying SA 299 in spirit. The next issue was on management representation letter. Many times we believe that we have taken a management representation letter from the management, which lists down everything, and I believe that that absorbs of my auditor's duty. I would believe that ultimately the auditor is responsible for signing the financial statements on true and fair view. And if there are deficiencies, then auditor is responsible. Just by taking a management representation letter that 100 rupees debtors are there, 100 rupee creditors are there, 100 rupee loans or advances are there, which are all good for recovery, without verification that in fact whether the debtors are good for recovery or is it doubtful, or do I need to make a provision, I don't think that by taking a mere representation of management representation letter, I can transfer the responsibility of an auditor to somebody else. And therefore, management representation letter is only a support document of what you have already done, signing off by the management to support your own findings and not to shift your findings or to absolve of your responsibility of an auditor. And therefore, management representation letter one must take to support your data, support your finding, support your information what management has given, so that ultimately management also owns the information which they have given. Because one of the first line in the audit report is, we have obtained all the information and explanation from the management. So to support that statement, I can take management representation letter, but not to shift my responsibility of an auditor to somebody else. The next is consolidation. Internationally, the principal auditor, what is called, is always a responsible for consolidation of financial statement, including all subsidiaries down the line. So hypothetically, I have one subsidiary, one associate, or I have 10 subsidiaries and 2 associates. The principal auditor is responsible for all the financial statements, which is ISA 600. In India, we have slightly modified that principle because in India, under Companies Act, every company is subject to an audit. And therefore, what we have done is that if the subsidiary company or an associate auditor has done an audit, as a principal auditor or as a holding company auditor or a parent company auditor, I have a right to rely on the financial statement signed by the subsidiary auditor. But if you have seen the SEBI circular in last March 2019, explaining what is SA 600, particularly in case of a listed entity under LODR, that every principal auditor or a parent company auditor should have issued a questionnaire to the subsidiary and associate auditor seeking certain basic information on the accounting principles. Because if I am doing a consolidation and if a subsidiary is following a particular accounting treatment, I am following a different accounting treatment, ultimately I am responsible at the end of the day because I am the parent company auditor. And therefore, the SEBI and the SA 600 requires you to send a questionnaire to the subsidiary and the associate auditor seeking certain accounting clarification and certain information. And this process is now mandatory for a listed entity after 1st April 2019. So whosoever is a parent company auditor for March 20 will have to comply the circular of the SEBI which was issued in March 19. But SA next issue is on 186, and which I have some concern on a professional basis. Section 186 of the Companies Act requires that if a company has given an intercorporate loans, Section 186 subsection 4 requires that the company which has given a loan is also expected to see that the person who has borrowed the money has used the money for the purpose for which it was borrowed, and what the regulators' expectations are, that if company A has given a loan to company B, whether company B is in a financial capacity to repay this loan to company A. Now, these two issues are interrelated. Section 186(4) also requires you to make a disclosure. Under CARO report, the auditors are also required to report that the company has complied with section. Because of certain irregularities, company B is not able to repay the loan. The regulator believes that it was the responsibility of company A's auditor to verify that why company B was not able to repay the loan. Now, I am not sure up to what level should I be going this, because suppose if the B is an intermediate holding company or an investment company, and if B has given a loan to a C, C has given a loan to a D, or in a chain up to 10 entities, up to what level I as a parent company auditor would be responsible to see that whether all the companies in a chain have a capacity to repay the loan, or is there any evergreening of loans between the companies for the purpose of meeting the deadlines and the targets of meeting the revenue and meeting the advances by the bankers. And therefore, this is one issue which I don't have an answer today, but this is exactly professional skepticism. If I understood rightly, the professional skepticism only says that if a client has submitted a particular information, it is my duty to challenge that information, that why you are saying like this. In my opinion, the actual document is something else. And this discussion also should be a part of a documentation. And therefore, in one of the reports which has been published by the regulators, there is a heavy reliance on that the firm failed to have follow professional skepticism. Now, this is very, very difficult scenario. Again, one would argue that am I not trusting the client, am I not trusting the management? There is no point, there is no argument that you do not trust the management or a client. You 100% trust management and client unless there is a suspicion that the information which is given to you is not right. But otherwise, it is your duty and you can always rely on the management to the extent your documents and the information supports your view. In the last issue on auditing standards is a fraud. Section 143 requires an auditor to report a fraud, first to an audit committee, to a board, to our regulators within the framework, and there are rules on this. I am not going into rules and everything. What my only point was that based on my sampling, based on my documentation, based on my statistical sampling techniques and the test of controls and ICFR, should I be able to conclude that is there a fraud or is there not a fraud? I was dealing with some company 3 days back, one of the large company. Some 25 samples was taken by an auditor which failed the test of controls. That entire purchase department, there are no controls. The quotations are not reliable, the quotations are managed, the addresses are common, the telephone numbers are common, it is all care of address. The auditor took another 25 controls. Out of 25, again 23 failed. The question is there a fraud? Answer may be yes, answer may be no. What is now expected to do is, I should now start doing an extensive audit of a transaction because my controls have failed 2 times, and therefore I start doing an investigation. And again, when I say investigation, not what a police or a CBI would do, or what a forensic auditor will do, I will do a further detailed analysis of the transactions to verify that is there any fraud or not. And if ultimately I find that there is a suspicion of a fraud, then my responsibility to report will start. And therefore, this reasonable assurance versus a fraudulent situation, these are very, very thin line of distinction between the two, and therefore one should take an appropriate call that is there a doubt or a suspicion where there is any fraudulent situation or a suspicious fraud situation is there, and therefore is there an obligation on me to report. Kitna time? Okay. The next issue, and again on smaller point, on the CARO. CARO has 3 or 4 important issues. One is physical verification of fixed assets. In this closed door, I can only tell you that once you sign the audit report, at least have the register in your place, whether Excel, physical, or any other document. Because in majority of the cases, the fixed asset register is hardly maintained, or is maintained but not reconciled with the financial statements. And many times, the location of the assets are also not right. The location of the assets could be third party, and the assets is lying in your books of accounts. The 2 critical points which I wanted to discuss was section 73 and the last para on the non-banking financial company. Section 73, which is a replica of section 58 capital A of the Companies Act on acceptance of deposit. There are many, many restrictions now to take a deposit even from a shareholders. And there are limits up to which you can borrow money from a shareholders. But there are 2 or 3 items. For example, I have taken an advance money and I have not supplied the goods for 365 days. That amount automatically deemed to be deposit under 73, and there is an obligation on me to report this transaction under CARO or any other regulatory authority. Or similarly, I have borrowed money accepting a deposit, but I have not done a compliance with an ROC which I am supposed to do. All such non-compliances will form part of your CARO, because CARO is actually a factual statement about compliance to a particular section or a non-compliance to a particular section. On the non-banking financial company, section 45 capital IA of the RBI Act requires every non-banking financial company to register, and there is no threshold. Now, many companies which are operating companies, which are doing a business activity, for any reason they discontinued the business activity, they have a surplus funds, they are invested in mutual fund, they are invested in listed securities. But if my net assets are more than 50% from financial assets and more than 50% income from financial income, irrespective of your object, irrespective of your name, it becomes a non-banking financial company. And the moment it is a non-banking financial company, in addition to a CARO report, there is a Reserve Bank of India Auditors Directions 1998, under which you have to actually file a separate report to RBI that so-and-so company is carrying on a non-banking financial company, but this company is not registered under NBFC, and therefore whatever actions RBI can take it, appropriately RBI will take it. And why I am using this, I am aware of Gujarat, where 50 chartered accountants have been subject to disciplinary action for not submitting this Special Directions 1998 report, where RBI felt that these companies are all non-banking financial companies and they have not made an exception report to the RBI. And therefore my only request is that please verify the financial assets and financial income criteria. There are certain exemptions, like for example bank deposits and bank interest. are outside 50% criteria. But if it is a mutual fund, dividends, shares, trading, derivatives, or any other items, then these are all subject to this. On the technology side, I would believe that with the increasing size and complexity, you don't have an option but not to follow technology. Because in my old days and my initial practice, I have also done a bank audit which is manual, where a product interest on a saving bank was calculated manually. And I have done this, and many senior members would have done this. But when we moved to a core banking in 2002 onwards, the entire scenario has changed. Similarly, for the companies, whether it is a trading company or a manufacturing company, the technology is must. But I must admit one thing, that technology can't take away my common sense and intelligence. It can only help me to support in my view. So whether to select a particular judgment or another judgment, it is my own professional judgment and decision. But the technology can help me to find out a relevant decision. Now whether it is helpful or not, that is ultimately my own decision. And therefore I would believe that with all technology, data analytics, auditing tools and everything, it is a necessity, but that can't replace everything. From application of your professional judgment, the human professional judgment will remain as it is, irrespective of whatever technology comes. Last 5 minutes on internal audit and concurrent audit. The entire landscape of internal audit has changed. What we used to do, a transaction audit, a pre-audit, that unless the auditor certifies, the payment will not be made. Unless the auditor certifies, the check will not be issued. This everything has completely changed today, and what management is looking for is more of a management audit or a business audit. I am not saying that transaction audit is not required. Transaction audit is required, but transaction audit is required maybe 20, 30, 40%. What is expected by management in a management or a business audit is there an improvement which can be done in an inventory movement? Is there an improvement which I can move in a supply chain, in a logistics cost, in a purchase cycle, in an inventory cycle, in a sales cycle? Because today, every businessman knows that what I can control is only the debit side of the P&L. The right-hand side of the P&L is not under my control. And therefore, if I can reduce even 1% of the interest cost, or even 0.5% of an interest cost, or even 2 rupees on the logistics or a supply chain, I can actually improve my profitability and EBITDA. And this is what they expected from the professionals. Doing a bank reconciliation and doing a bank is all technology-driven instrument now. But what client wants is there a sufficient funds lying in can I invest into mutual fund and treasury even for 5 days? So if there is a Christmas vacation or a Diwali vacation, can I go and invest 4 days my money in a liquid fund which can actually fetch 50,000 rupees of interest or a dividend? That is what client wants from all of us. Mere transaction audit has now completely shifted to a technology-driven, process-driven, a business audit or a management audit. Similarly, on a concurrent audit, I have not done concurrent audit for last 10, 15 years, but I still remember our olden days where I used to do a Dana Bank concurrent audit where 160-page booklet was there. And that 160-page booklet, you used to answer all questions. सामने KYC का बोर्ड लगाया कि नहीं, May I help you का बोर्ड लगाया कि नहीं, कैशियर टाइम पे आता है कि नहीं. All these bank process-driven and administrative work was also given to the concurrent auditor. In today's date, and what I was reading an article before few days, where RBI wants that a concurrent auditor is also responsible for movement of advances, NP and monitoring, in addition to the bank's role. And therefore, I would believe that either an internal auditor or a concurrent auditor, it's a terminology. Whichever terminology you use, he is an extension of the management. A management can't do many things on its own. and therefore they are employing outside professional, so that outside professional can support the management in their actions for effectively controlling and monitoring the transactions. So a branch manager is expected to give an advance, is expected to do an analysis of a report, is expected to monitor, and is also expected to maintain a relationship. All this role he is not able to have a monitoring, and therefore, in all those cases, external consultant or a professional is appointed so that he can help the management in monitoring the transactions. So ultimately, whichever terminology we use of an internal management, business audit or a concurrent is an aid to the management, and the only suggestion is, and which I have learned in my practice in 1996, raising a question is very, very easy for all of us in the life. But with every question, give a solution to a client also. Because ultimately, the client is sitting there to seek our advice for a solution. And again, when I am using the word solution, what is possible within the four corners of law. But I must advise them a correct solution based on my experience with many, many other clients, my experience of learning from many, many other professionals. And therefore, I must give him some advice which would be helpful to him in his carrying on the business or maintaining a controls and systems, and ultimately he can grow. Thank you.
Thank you, sir, for your insights. As per new theme, let us now move to panel discussion. I request CA Nikhil Totuka to take lead.
Thank you, sir, for deliberating in such detail all the various aspects of audit, along with all the auditing standard and various type of audit. So, taking the panel discussion further, as you're already aware, we had requested our professional brothers to send across queries on the particular topic, and we have received multiple queries in the same aspect. Now, the queries can be broadly divided into two parts, something which are futuristic in nature, that where the audit function, the future of audit function, and something which are related to current issues. So to start off, we will be starting with current issues. As you had rightly mentioned towards the beginning of your presentation, that the environment and the expectation from the auditors is changing tremendously. Along with this, there is continuously changes in laws. There are new laws which are coming up. There are older laws which are changing. There are new compliances which are coming up. In such a scenario, I believe Anil ji has a very pertinent and relevant question for you.
Yes, sir. Sir, how should a proprietorship or a relatively small size professional firm, I think there are two partners is there, cope up with the task of updating of knowledge base in the current scenario of ever-changing law, and also meet the strict deadline for various compliance to be made, sir?
I'll only put it this way, that there is no option for a chartered accountant not to have a continuous learning. The CP concept of an institute in spirit is a very good concept, though many people may or may not follow strictly in spirit. But for a small size or a proprietary firm or an LLP firm, investing in knowledge is very, very critical. I know many, many firms who are proprietors are doing exceedingly well. Sometimes in a lighter tone, whether the chicken is first or the egg is first, do I have the client to work on a particular area and therefore I will go and buy books and learn? Or should I be buying a particular books, learning, attending seminar, learning from friends and ready with any answer which a client comes tomorrow? Now that's a question somebody has to answer to oneself. My personal view would be that if sufficient, we are all competent, we are all, at least we have passed a tough exams of the institute. And therefore, how do we channelize that competence into a right direction? By investing into knowledge, and second important thing is a training to the people. somewhere we lack training to our own people. When the laws are changing, I am not sure how many of you, the assessment year 17-18 assessments are getting time barred tomorrow. How many of, I have not seen in my office that any officer has asked a question on compliance to ICDS. ICDS are mandatory from assessment year 17-18. All your clients who may or may not have complied ICDS, there are all chances that there will be 147-263 for not doing an ICDS compliance. This is what my duty as a proprietor or a chartered accountant. I should go and train my people, team. Whatever we learn, whatever our experience are, if we invest into knowledge and training to the people, ultimately they do the basic audit, they do the basic work. On their reliance, we are signing the financial statements. And therefore, if they do right things, we will actually have more time for development of other practices.
That was a very good piece of advice, sir, especially for the young professionals who are present here. And during your lecture, sir, you discussed about joint audit and what should be the responsibilities in joint audit of various auditors. But nowadays, we are also facing an issue wherein in the same company, there might be a separate statutory auditor, a different tax auditor, and nowadays a new or a different GST auditor. So, what is the problem that you see here that might come up, which we can?
Sir, the statutory audit gets completed in June. Then tax audits are done in the month of September. Then again, the new baby that has come up, GST audit. These are being yet, the date was December, but I don't know till when it gets completed. So now if the GST auditor, while doing his audit, he discovers that there are some input credits that are to be reversed. And that has not been considered, or statutory audit might have missed those things. So can you enlighten us that how would, what would be its impact on the statutory auditor, whether he'll be liable for any, misconduct, or how would this thing has to be dealt upon with?
Can I just take 2 minutes before I answer this question exactly on the same issue? Our statutory audit is conducted in a listed entity by 31st May. The tax audit is done in the month of November. In the November, the tax auditor will come and say, you have not deducted TDS on 100 rupees. And therefore, I will disallow under 34A. The disallowance is not material. The problem is that the moment tax auditor reports in para 34 small a, that information is shared to the TDS department that so-and-so company has not done a withholding TDS deduction in time, and therefore they start 201 proceedings. And in the morning, Sanjay Janwar was saying about the TDS default and the prosecution, and I have seen exactly based on 34A area reporting that prosecution notices have started for not deducting the TDS. And therefore, in last 2 years, I have told to my office that when you do an audit and finalize your statutory audit, your certain relevant areas like TDS, tax credit, or similar obligation, you must verify at that point of time only. Because if subsequently you identify there is a non-compliance of a particular law, then your hands are tied, because now under Companies Act, you can't even reopen your accounts unless NCLT approves under 131. The rules are yet to be out. And therefore, I would believe that, and just to supplement what he said, that if tomorrow GST input credit, some mistakes are there, what do I do? Do I go and reopen my accounts? Answer is no. If there are non-compliances of a GST input credit, maybe a GST auditor will have to report appropriately. If it is a material item, then somebody can always make an allegation on the statutory auditor that he did not verify properly. Because at the end of the day, the statutory auditor is responsible for compliance of all rules and regulations to the extent which is applicable. The new code of ethics of the institute, which is applicable from 1st April 2020, also requires to have compliance of all laws and regulations. And therefore, to supplement, answer your question, I can't reopen the accounts. If it is a material items, then the GST auditor will have to either reverse or qualify and give effect in the next year financials.
So, sir,
How about the liability, whether statutory auditor would be held liable?
If it is a material item, then a statutory auditor could be held responsible.
so in this particular scenario wherein a statutory auditor is also required to dig in deep in terms of income tax or in terms of GST, there are other areas which have always been traditionally a part of audit, as you had also discussed earlier. So be it confirmation, receiving confirmations from debtors. Similarly, these days, MSME is a new avenue that has come up. So seeking MSME status confirmation from vendors. So all these collection, collation of information along with complying with all these laws. So before I pose this question to Dhinal sir, first I would like to ask Nitinji. So in these scenarios wherein you need to get these confirmations from vendors, from debtors, what should be the approach of auditor in your view?
See, Nikhil, appointment of auditor is done in AGM, and that is for the next year.
Right.
And you have ample of time till the conclusion of the audit. Like you get appointed for the year 2020 in September 19. So after, and nowadays after like you have a lot of e-commerce and a lot of e-confirmations you can get it. So you can very well send the account statement to the debtors through emails, and you can obtain the confirmation via email. Because now it is mandatory to obtain the confirmation. At least you must have, you must obtain sizable amount of, like the sample size must have been, should have been 80%. These much confirmation you should have. So, and you cannot override the law also. So that needs to be obtained to my knowledge, but sir,
Can I add?
Do you second?
Yeah, can I add just
Yes.
something? Institute, QRB both have taken a consistent view that seeking an external confirmation is not a mandatory necessity. I must try to obtain confirmation, but suppose if there is a large debtors or a large advances or a large creditors, subsequent to the year end, if I do a secondary analysis, whether he has paid the money, whether the transactions are continuing, whether the transactions are in routine course of my business, if my 100 rupees was outstanding, whether he has paid 80 rupees, whether 20 is again recovered in the subsequent month. If on a secondary testing of information or an alternative testing of information, if I am able to get a comfort, then that is also sufficient. But if in a large company there are many small size debtors, then this alternative testing is okay. But if it is a large company with a substantial amount of debtors, or there are very small, limited size of customers, then at least seeking a confirmation from at least material debtors would be very relevant.
No, but sir, how about MSME creditors? That has
MSME
to be-
creditors, you have to seek confirmation because you have to first take a declaration whether they are MSME or not.
If they are, that has to be done 100%.
Yeah, MSME 100%.
And
So
sir,
normally now everybody gets certificates
Yes.
because you have to also file form with ROC,
Yes, that is.
and therefore you have to get a certificate.
so sir,
But how to, like for a small sized firm, how to come up with this?
No, you have to follow. So I agree that for a small size, sometimes the compliance level is very high. That I agree.
So, sir, many a times, as you have rightly said, that the secondary tools are there to verify all these accounts. However, as a substitute, a practice is undertaken for management representation. I think you have already deliberated on that, but still your view on this particular topic, how much a management representation is a useful tool in this aspect?
So management representation later cannot replace my obligation. If 100 rupees are debtors, it is my duty to verify that they are good for recovery, they are doubtful, do I need to make a provision? All these, it is my responsibility. What I am taking a confirmation is to support my finding, that if I do a finding that 100 rupees are good for recovery, the management also supports that view. So management representation letter is only to give you a support on your finding, your analysis, your verification, that what you have done is also supported by the management.
So during your, actually you had discussed about three various kinds of control. So there is a management control, there is operational control, and there is financial control. And principally an auditor is effectively required to undertake and check the financial controls of an organization. So we received a very peculiar question, which we have seen these days. Suppose in a particular company, there are two promoters who have been managing the company, and those two promoters have acted in capacity of director as well. Now, due to any kind of feud, one of the promoter have approached the NCLT that my signatures as director on the financial statements were forged. So, Anil, do you want to deliberate on that?
Where does it leave an auditor who has no knowledge about the forgery in the signature of a director? And what is the precaution as an auditor he has to take?
I would believe that it is not the role of an auditor to verify the signature of a director. But with the changing time, at least some reasonable caution should be taken that whether a particular director has signed the financials or not. And if I am aware that there are certain disputes between the directors or some case is going on in the NCLT, then my care needs to increase substantially to verify. Because many times I have seen that majority of the targets are the auditors, wherever there is a dispute between the directors or between the family members. But personally speaking, I would not believe that if a signature is forged by somebody of a director, then auditor should be held responsible. Because it is not my duty to verify each and every signature that whether a particular person has actually signed the financial statement. What is my duty under Companies Act, whether the managing director or two directors or if there is a CFO, whether the financial statements are signed. Maybe out of extra caution, I can verify the board of directors minutes or the register of the directors, whether the directors have to give the declaration along with the particulars. And maybe I can do that, but prima facie, I should not be held responsible.
NCLT is issuing the notices to the statutory auditor.
Pardon?
NCLT has issued the notice to the statutory auditor.
Fine. See, that is a part of the life. I would put it this way, it's a professional hazard. But I don't think auditor should be responsible to see that whether a director has signed the financial statements.
So, sir,
For example.
so for please.
For example.
हेलो हाँ सर, मैं ये कह रहा हूँ कि जो जिस तरीके से आजकल फ्रॉड हो रहे हैं या जिस तरीके से घरों में झगड़ा होता है, उसके बाद जो मैं भी डिसिप्लिनरी में रहा हूँ, मैं भी काउंसिल में रहा हूँ, हस्बैंड वाइफ में भी झगड़ा हुआ तो मैंने देखा, सास ससुर में भी बहू और ससुर में भी झगड़ा हुआ तो देखा, तो उस समय सब दोनों एक दूसरे को झूठा झूठा बताते हैं. और द ओनली पुअर गाय विच इज़ अवेलेबल ऑन दिस अर्थ इज़ अ चार्टर्ड अकाउंटेंट, जिसको खींच के पूरी तरीके से घर वाले भी ले आते हैं, सोसाइटी वाले भी ले आते हैं, कंपनी वाले भी ले आते हैं. तो जिस तरीके से लॉ चल रहा है, मेरे को लगता है कि जिस हिसाब का फियर बताते हैं कि साहब डायरेक्टर कहता है मैंने साइन नहीं करे, कांट वी गिव दिस गाइडेंस टू आवर मेंबर्स कि ऐसी कंपनियों में साइन करने से पहले एक बार आप उनको चिट्ठी डाल दो कि हमारे पास ये बैलेंस शीट साइनिंग के लिए आई है, आपने इस पर साइन करे है ना. Whether we can do this or not, this I am leaving to the council because I am not no more in the council.
I am also not in the council.
No, but what I am trying to say, why I am trying to say is this, sir, कि the scenario is such कि for every damn thing, there papers, the TV, everywhere you go है कि क्या पता क्या crime करके हमारी society निकली है. और मतलब I cannot डिस्क्राइब दिस कि कई बार कैसी सिचुएशन होती है, ओह चार्टर्ड अकाउंटेंट हो यार, आजकल आपका तो बहुत नाम चल रहा है। तो नाम चल रहा है उल्टा उससे, आजकल चार्टर्ड अकाउंटेंट बताना बंद कर रखा है कि भाई चार्टर्ड अकाउंटेंट है, जब तक कोई नहीं पूछता। तो मेरा जो मानना है कि सोसाइटी की एक्सपेक्टेशन, अपनी लिमिटेशंस और प्रैक्टिकल सिचुएशन को देखते हुए मेरा ये मानना इंस्टीट्यूट को जो करना चाहिए या नहीं कर रही है, जो नहीं कर पा रही है, वो जो भी इसके कारण है, इंस्टीट्यूट को कुछ स्टेप्स लेने चाहिए अपने प्रोफेशन को बचाने के लिए, अपने प्रोफेशन की इज्जत को बचाने के लिए। मैं आपको लाइव एग्जांपल बताता हूं सर, बहुत इफ यू परमिट मी, मैं बैठा मैं एक चश्मे की दुकान पे अपने चश्मे का नंबर चेक करा रहा था। एक बुजुर्ग से आदमी आया 80 से साल के, उन्होंने आके कहा यार मेरे को जल्दी है। तो मैंने उठ गया मैं चेयर से, मैंने कहा साहब आप बैठ जाओ, मैं तो 5 मिनट बात करा लूंगा, यू आर एल्डर टू मी। उस आदमी ने जब अपनी आँख वहाँ चेक करा ली, हाथ में लाते हुए उसने मेरे को थैंक यू दिया, मैंने भी उसको थैंक यू दिया। फिर उसने अपना इंट्रोडक्शन दिया कि आई एम XYZ, फॉर्मर IG पुलिस राजस्थान। मैंने कहा सर आई एम PP पारिक, चार्टर्ड अकाउंटेंट। ओह चार्टर्ड अकाउंटेंट, यार आपके लिए तो प्रधानमंत्री ने क्या क्या बोला, आप लोग तो बड़े छाए हुए हो आजकल। भगवान की दया से मेरा प्रेजेंस ऑफ, मैं जवाब बराबर देता हूँ। मैंने कहा सर आप एक माइनॉरिटी, हर सोसाइटी के अंदर, हर समाज में माइनॉरिटी कुछ करती है, उस कारण से उस पूरे समाज को बदनाम नहीं करना चाहिए। मैं सिर्फ आपसे ही पूछता हूँ, मेरे को 2 आदमी बता जो पुलिस को अच्छा बताते हैं। मेरे जवाब सुन के डॉक्टर बोला, वो एकदम से तो थैंक यू करके भाग गए। तो डॉक्टर बोला यार पारिक साहब आप बहुत जोर का जवाब देते हो। मैंने कहा इस पागल के लिए मैंने कुर्सी छोड़ी और वो मेरे को ही सुना के जा रहा है। तो व्हाट आई एम ट्राइंग टू से इज दिस सर, कि इस प्रोफेशन में जो मैं मेरा किस्सा बता सकता हूँ। मैं जब काउंसिल में था, जो आजकल जो रिपोर्ट आ रही है और जो रिपोर्ट के अंदर ऑडिटर्स की रेस्पॉन्सिबिलिटी डे बाय डे बढ़ाए जा रहे हैं, और अपनी इंस्टीट्यूट जो मेरे को ध्यान है ये 99 में भी आया था, और उस समय श्री राम कॉलेज कॉमर्स के प्रिंसिपल उसमें थे मेंबर। जब इतने सारे सर्टिफिकेट के रूप में इन्होंने पैरा डाले थे उस रिपोर्ट में, तो मैंने उनको बोला था सर ये रिपोर्ट्स नहीं है, ये ऑडिट नहीं है, ये इंडिविजुअल सर्टिफिकेट्स है फॉर एवरी एक्टिविटी, कि आपने ये काम करा, आपने लोन सही चुकाया, आपने लोन को सही यूज करा, आपने इसको ये नहीं करा। दीज आर द सर्टिफिकेट्स, दीज आर नॉट द ऑडिट। फॉर सर्टिफिकेट्स देयर इज डिफरेंट फीस। तो मैंने उस समय भी था, आप चाहे से 99 2000 की उठा के देख लीजिए, मैं उस कमेटी का मेंबर था, गवर्नमेंट के कॉर्पोरेट सेक्रेटरी के पास मेरी बात हो रही थी सारी। तो मैंने लिख के दिया था ये इंस्टीट्यूट की तरफ से कि ये सर्टिफिकेट्स हैं, इसको आप ऑडिट में नहीं डाल सकते। अगर आपको सर्टिफिकेट्स लेने हैं तो डिफरेंट असाइनमेंट, तो डिफरेंट फीस तो हम ये भी करेंगे, लेकिन आप ऑडिट के अंदर हर बार 5 पैरे बढ़ा देते हो और फिर कहते हो कि ऑडिटर ने ये क्यों नहीं देखा। ऑडिट आपने कंपनी तो दी 1000 करोड़ की, और 1000 करोड़ में हम कहाँ से देखेंगे इसको। आई डोंट नो व्हाई उसके बाद क्या हुआ, मैं तो उसके बाद चुनाव लड़ा भी नहीं भगवान की दया से। लेकिन मेरे को ये लगता है कि इंस्टीट्यूट को अपने पॉइंट्स को बहुत स्पेसिफिक डालना चाहिए। दे शुड डिस्टिंग्विश बिटवीन सर्टिफिकेट एंड ऑडिट। ऑडिट इज ए एश्योरेंस ओनली, सर्टिफिकेट इज समथिंग मोर, एंड फॉर सर्टिफिकेट यू रिक्वायर इंटेंसिव चेकिंग एंड इंटेंसिव रिपोर्टिंग। गिविंग 20 पैरा एवरी टाइम, जिस भी एक अफसर के दिमाग में आती है वो डाल देता है, ऑडिटर से ये भी ले लो, ऑडिटर से ये भी ले लो। अभी तक उन्होंने ये शादी का सर्टिफिकेट लेना ऑडिटर से नहीं लिया, बाकी सारे सर्टिफिकेट वो ऑडिटर से लेते हैं। मेरा सजेशन है इंस्टीट्यूट को, मेरे बराबर में हमारे छोटे भाई बैठे हुए हैं, ये इनको मैं ये कहना चाहता हूँ कि सरकार को अपने को समझाना चाहिए कि सर्टिफिकेट इज डिफरेंट, ऑडिट इज डिफरेंट। इफ यू वांट एनी सर्टिफिकेट, यू वांट अस टू डू ए स्पेसिफिक वर्क, जैसे अभी जैसे सारे शर्मा जी और ये सब बता रहे थे, इन सबको लेना है तो आप इसके लिए बारे में फीस तो दो। फीस तो आप रखोगे एक्स, वो की वो फीस है, और पैरा बढ़ाते जाओगे धड़ाधड़ ये सर्टिफिकेट। फिर ऑडिटर क्या कर रहा था। मैं अगर आपका चेयरमैन ही चोर हो जाए, जिसको बोर्ड ने सारी पावर दे रखी है कि ये सब चीज कर सकता है, सारे आपने रूल तो बना दिए, बट ओवर एंड अबव ही इज ऑथराइज्ड टू डू XYZ थिंग। अब वो चोरी कर लेता है तो ऑडिटर क्या करेगा।
आई थिंक पारिक सर ने ऑलरेडी इस चीज का जवाब अपनी स्पीच में काफी डिटेल में
मैं
दिया।
देर से आया था, मैं उसकी नहीं कह रहा, मैं जवाब की नहीं सुनना चाह रहा। मैं सिर्फ ये कहना चाह रहा हूँ सर कि अपने को सर्टिफिकेट और ऑडिट के बीच में डिफरेंस करने के लिए सरकार को समझाना चाहिए, वहाँ पे आपको एक्सप्लेन करना चाहिए। आप चाहें तो मैंने उस समय लेटर लिखा हुआ था, वहाँ पे होगा, शायद क्या पता 20 साल पुराना रिकॉर्ड होता भी है या नहीं, लेकिन ये सरकार को समझाना बहुत जरूरी। दिस इज माई, आई डोंट वांट टू डिस्कस मच ऑन दिस बिकॉज़ ज्यादा टाइम नहीं लेना चाहता।
I appreciate.
थैंक यू।
सर बस एक ही बात कहना चाहूँगा जो पारिक साहब ने कहा कि मैं सेंट्रल काउंसिल मेंबर था। अपन भी जब क्रिकेट का मैच देखते हैं ना तो लगता है साला कितनी गलती कर रहा है। सर आपने एक ही इलेक्शन लड़ा, 2 इलेक्शन के लिए हमने हाथ जोड़े थे, आपको आगे आना चाहिए था और बोलना चाहिए था।
मैं अगर क्रिकेट खिलाड़ी होता और मैं आउट होने के बाद बोलता तो ठीक था। मैं तो क्रिकेट खिलाड़ी बाहर से बोल के, मैं ये खुद तो कह रहा हूँ कि सारा संसार अपने को बाहर से देख के बोल रहा है। आप वहां पे खिलाड़ी हो, वहां पे बोलो।
On that note, so sir, I think ऑडियंस से भी ये क्लैरिटी काफ़ी ज़्यादा आ गई है कि जो ट्रेडिशनल ऑडिट प्रैक्टिसेस थी, सो बी इट स्टैट्यूटरी ऑडिट, इंटरनल ऑडिट, देयर आर लॉट ऑफ, इट इज़ बिकमिंग ऑल द मोर कम्बरसम प्रोसेस। जैसा पारिक सर ने क्लियरली बोला कि ऑडिट के अंदर मल्टीपल सर्टिफिकेशन एक्सपेक्ट हो रहे हैं। सो ट्रेडिशनली ऑडिट फंक्शन के अंदर स्टैट्यूटरी ऑडिट मानते थे, इंटरनल ऑडिट मानते थे, कॉन्करेंट ऑडिट मानते थे। सो according to you, what are the new trends and avenues coming up in audit? And you know, technology and system audit, are these also booming areas wherein young professionals should strive for?
So I already covered internal management and a concurrent audit, but I would believe that even the systems audit, because whenever you are migrating to X ERP to another ERP, or you are implementing an ERP for the first time, or you are already having the functions on the computer, the integrity of data is very, very important. And today the audit trails, changes in the data, changes in the computer systems, and the MIS information which the management wants, you actually need to do a system audits on a regular basis. And I have seen chartered accountants who are experts on IT and who are very good on the information technology audit, which is also a very good area of practice. I would believe audit is a base of any professional activity. But within the audit, you must diversify it into different areas of audit, like IT systems, like management audit, like forensic audit. There are many, many areas of audit. There is an area I know people are doing environmental audit. And they actually certify that whether your business and the processes which are there are in compliance with environmental laws or not. So there are many, many areas of practice, and I think one must change their mindset to a different areas of practice.
Right. So, right, there are various areas, as you have rightly mentioned, about audit. In the overall system, the ERP implementation that you right now mentioned, there is a lot of technology that the client or the companies, they are evolving, they are putting to use. Similarly, a lot of technology is nowadays being used by the audit firms, such as data analytics, which you had also discussed during your deliberation. So, for example, earlier, the very basic concept of audit used to be sampling. But nowadays, with data analytics, almost the complete base data is being analyzed. So, as far as smaller firms are concerned, so Nitin, I believe for technology you had that query. For
how these small firms would cope up with the upcoming technologies, like how it will not be possible for them to afford this kind of technology while doing the audits, like.
But why I should not get a chance of learning, even if it is an SAP, I can go and learn an SAP. If I have a general understanding of a technology, learning on an SAP or learning on any other technology, at the end of the day, principles are same. It is all about internal mechanics and the coding which happens. Ultimately, the principles from an audit perspective. So, in a lighter tone, I learned one thing in a banking industry, that whichever question you ask, they have a register. You ask any question in a banking industry, they always have a register which is maintained. Yes. Now, if I know that bank is maintaining a register, so similarly in a core banking, every reports are available in the system. But many times we as a professionals are not aware that which reports are available in the banking system. So my understanding is that if for a proprietor or a smaller firm, learning of a technology is a necessity, particularly for youngsters, for any audit now, and you need to undertake learning.
So you mean to say that our institute must create some platform wherein we can go and learn these SAPs or Finacle? There should be some classes.
My next speaker
Prakash
is a
sir,
council colleague, he will. ये प्रश्न
ऐसे कॉमन टूल्स हैं उनके यूज करने के लिए वो सारी हमने अलग से बजट बनाया और कुछ सवाल करेंगे.
Great, sir.
Sir, Central Council member Anil Bhandari is going to speak on technology.
So, sir, taking back the question from technology, as you had mentioned that you were a member of a quality review board for ICAI. As per the last review report of QRB, they had mentioned that the biggest non-compliances that they had seen or they have reported, the QRB board, was relating to AS1, accounting policies. So what is your take on that?
So the observation of the QRB is that the accounting standard number 1 requires you 2 or 3 things. 1, disclosure of all accounting policies at one place. Disclosure of all accounting policies which are material to the financial statements. And third, basic accounting assumptions like going concern or a prudence. Now, there are large non-compliances on 2 parts. 1, they do not disclose accounting policy at one place. Some discloses under notes, some discloses under balance sheet, some discloses at different places. And second, for material items, they do not disclose accounting policy. So for example, there is only one accounting policy under AS9 on revenue recognition, but you have a substantial interest income, you have a substantial commission income, you have a substantial exports benefit, you have a substantial dividend income. All these accounting policies are also required to be disclosed if it is material to the financial statements. Now, these policies are normally not disclosed separately. The third part, we have an SA 570 on the going concern, where the institute has also taken a view last year that if there are material uncertainty to the business in this economic slowdown, if I have a cash flow challenge, my liabilities are more than my assets, and there are material uncertainty, it is a responsibility of the management to disclose the reasons that why and when the material uncertainty will get resolved. If an auditor does not verify this, or if the client does not specify specifically as per SA 570, then it is a responsible auditor to actually qualify. Now, these compliances are not made by many firms.
Right. So I think now everybody, while finalizing their the books of accounts of the clients, they would be taking note of this. But whenever, like yesterday when we were discussing whatever questions that have come, the moment we discussed QRB, automatically NFRA also came into picture. And I believe both Anil Bhai as well as Nitin ji has a question on that. So first I will come down to Anil ji.
Sir, whether passing over of monitoring and compliance role for large corporate to NAFRA from the quality review board was a threat to CA for attestation work?
In the presence of 4 council members, I am not supposed to speak on the threat to ICAI. Huh? No. Okay. So, I think the intention of the government under 132 is to follow what the US, UK or certain large developed countries are following on the independent financial regulators. The government concern on QRB was that ultimately it is under the Chartered Accountants Act, and there are 5 council members which are nominated. I was one of them who was nominated by the council on the QRB. And therefore, the government feels that, or the society at large feels that there is no independence. Third, the QRB recommendation goes to council, and council finally takes a view that should a particular case be referred to the disciplinary committee or not. And therefore, the QRB recommendations under 28, section 28A goes to the council. And therefore, there was an independence issue on the role of a QRB. Though the majority members and the chairperson is also appointed by the government, but the process which is followed under 28A is an independence issue. And therefore, government thought that we should have an independent regulator, independent of the institute, where only government has a control, where the institute president and the other people are the ex officio on the NAFRA board. So like the chairman accounting standard board, chairman auditing standard board is the ex officio of the chairman of the NAFRA auditing standards and accounting standard. But ultimately the final board consists of the government nominees with president of the institute and the other institutes as a member. And today the role is that all listed company review after 1st November 2018 has shifted to NAFRA. QRB is now left only with unlisted companies, including LLPs, partnership firms, NGOs and NPOs, which are now be reviewed by the QRB. All listed has shifted to NAFRA, unless NAFRA specifically request QRB to undertake a review. And the distinction between FRRB and the QRB is that in FRRB it's a cold review. The chartered accountant does not come to the auditor's place. In a QRB, if I have done an audit of an ex private limited company, and if PRAKARSH is appointed as a QRB reviewer, he will actually come to my office, review that particular file with all compliance to accounting standards, auditing standards, Companies Act, and other disclosures, and then finally he will give his report. It will go to the QRB board, and finally the view will be taken.
So section 132 of NAFRA empowers to debar auditor firm for a period of 6 months to 10 years. But according to this Company Law Committee report 2019, they have said that it is disproportionate because of one person, a firm cannot be debarred. Instead of that, heavy monetary penalty should be imposed. So what is your view about that?
So it is right. If I just take a simple example, if a patient dies in a hospital, that does not mean that entire hospital should be closed. And therefore, if I have 10 partners, 2 are doing audit, 2 are doing GST, 2 are doing income tax, 2 are doing some other work, just because I am a partnership firm, that does not mean that a firm should be closed. A particular partner is responsible for a particular audit, and the report also says that if the evidences are found that the other partners colluded along with me in doing something wrong, then those is responsible. Why the penalties are heavy? Because what the logic is that ultimately the fees which has come to the firm is shared by all the partners in an appropriate percentage. So the other partner also got some monetary benefit, and therefore you should levy a higher penalty. That's a logic which is given in the report, which is, I think, reasonable, that you can't punish the entire firm for some irregularity or some wrongdoing by 1 or 2 partners in a firm.
Because sir, recently there have been certain instances wherein the government as well as the authorities have proposed that the complete
ban on all the firms.
Yes, the overall firm. But I believe that this is a welcome recommendation by the Company Law Committee report. So sir, due to paucity of time, I believe that we will be taking our last question. So earlier we had already discussed about frauds and the differentiation between a bloodhound as well as a watchdog. Now this is a very specific question under the GST regime. So there is anti-profiteering regulations that have been announced. So what would be the role of an auditor in case of fraud undetected by a previous auditor in passing on the profit under anti-profiteering law?
I would believe that anti-profiteering law under GST is not a fraud. What anti-profiteering law says, that if earlier I was not getting a GST benefit, now I am getting an input credit, the rate is reduced. So whatever that incremental benefit which I got because of the taxation structure, that benefit I should pass on to the customer.
Right.
That is a law. Right. Now, it has nothing to do with an audit. It is not a fraud. If I was priced a particular product at 20, because of the benefit now I should have priced product at 18, and I should have passed on that 2 rupee benefit to the customer.
Right.
And therefore, I personally would believe it is not a fraud. But yes, as an auditor, if he finds, because ultimately this will also go into compliance of rules and regulation, that he should at least ensure, particularly where he believes that there are some chances of some benefit because of the GST, to prima facie verify that is there any anti-profiteering implications or not. Because anti-profiteering implication, whatever you are hearing in the media, there are large cases which are going on, and that itself does not mean that even the industry has done something wrong. It's a matter of view between the two parties, and some court will decide at some point of time. So, but one thing, at the end of the day, when I'm doing a statutory audit, it is my responsibility to prima facie verify that all applicable laws and regulations, like GST, like income tax or similar laws, is verified or not, or are complied materially, at least in a material aspects.
Right. Thank you so much, sir, for
Can
your...
I take 1 minute last?
Please.
In last 2 years, I have seen that all IBC related cases and the financial statements, there are many frauds which have come on the table. And what is happening, that ex-chartered accountant has signed the financial statements, and when it goes to IBC, the IP would appoint third party as a forensic auditor. And in a forensic auditor, to my great surprise, and I have documents for that, and therefore I can tell you with confidence, for certain money laundering activities and siphoning and diversion, the auditor was directly involved. There are mails, there are documents which are all available in file. And therefore, my only request is, and second is, I was just having a QRB meeting before one week. In a majority of the IBC related cases, there are substantial non-compliances of accounting standards and the Companies Act. And therefore, my only request is, and again my experience, I am not sure whether that is right or wrong. Majority of the siphoning off and majority of the diversion happens only in debtors and advances. And the word capital advance is a very fishy word. Wherever you have a capital advance, it is doubtful. Going on for number of years, only creating documents, and then after 5 years, after 6 years, I write it off. Why 6 years? Because if I write it off within 6 years, then I have an income tax implication under 41(1). And therefore, to avoid 41(1) implication, I write off after 6 years. And there are huge amounts, and I can tell you, MCA is also aware, because in a loan of 49,000 crores, my tangible asset value is only 22,000 crores. So 27,000 crores has not gone into air. It has gone somewhere. And therefore, my only request is that debtors, advances, these two items, and the creditors are very material item in the financial statement that you must verify that whether this genuine party exists, whether there are transactions, and if there are no transactions, then please have guts to qualify or make a provision. If the client does not agree to provide, please go and qualify. Otherwise, sometime, if that same company goes to IBC tomorrow, because now the personal guarantee and the personal insolvency is also going to be notified very soon. And if that happens, then every chartered account auditor would be held responsible. Thank you very much.
Thank you so much, sir.
Ladies and gentlemen, let's put our hands together for the speaker, moderator, and session panelists. Thank you all for such an enriching session. We all are now acquainted about the changing role of auditor. we have understood how important it is to maintain all the working papers. We have also noted that there is a need to update ourselves and our people. We have also understood the new avenues which are now available. I am sure the session will help the audience in aptly adopting the new challenges. Thank you once again.
Friends, remember to be part of the mega musical evening tomorrow at East Lawn Entertainment Paradise near Jawar Circle from 8 p.m. onwards, which is followed by a delicious dinner. We have with us sensational singers Mohit Gaur and Divya Bhatt to rock our new year. In case anyone needs extra passes for cultural evening, the same are available on May I Help You desk outside.
The event would not have been that successful without our sponsors. One of our sponsors is Credit Q. Credit Q is a platform for MSME where businessmen can report their business credit defaulters. A solution to make sure that their clients paid on time. An early warning signal similar to CIBIL for banks. Thank you, Credit Q. Abhishek, we have now successfully reached to the last technical session of this two-day national conference, PRAKARSH. The day so far has been astounding. Knowledge shared is power multiplied. So let us collectively multiply many folds.
Embracing the digital world is the need of our. The upcoming session is based on the changing technologies coming forth our profession. We, the professionals, are to get acquainted and move hand in hand with the penetrating technology. To enlighten us on the same, I invite a learned speaker, CA Anil Bhandari, for a session on the topic, in this hyper-converged world of technology, is accounting and auditing a dying practice? I also invite CA Gautam Sharma and Vice Chairman CIRC, CA Churchill Jain, on stage to present a green gold and memento to our learned speaker as an expression of our affection and reverence. For this session, as an exception, we will not have any panel discussion.
Friends, CA Anil Bhandari is a name well known to all of us. He is a person of professional vigor, high integrity, along with technical expertise. He is also a cost accountant, certified internal auditor from the Institute of Internal Auditor USA, and certified information system auditor from ICAI USA. He has been the past president of the Institute of Internal Auditor India and has served the board of ICAI India Task Force. It is indeed a privilege to listen to him. Welcome, sir.
So, very good afternoon. My colleagues of the dais, seniors in profession, chartered accountants, ladies and gentlemen. I'm not sure if you kind of noticed the topic is auditing and accounting a dying practice. Please bear with me. The intent is not to come here, ask you to have good lunches and breakfast and dinner and say that, thank you so much, please go back home and you don't have any work. That's not the intent. We'll probably just bear with me throughout the presentation and probably you'll get a glimpse of what I'm trying to talk to you about. I've been here since morning, and I believe, of course, all of us have been here since morning. So I'll try and make this a little fast, just to ensure that you have a good time in the evening left out. And of course, you have questions. Sure. Okay. Appreciate it. And of course, if you have questions, feel free to kind of interact. I love interaction more. Ideally, it should not be a one-way speech. I think I had a very interesting session just before me from Dhinal, who happens to be our past council member as well. And I did speak about something to do with auditing and about the ethics and about the internal audit and so on and so forth. I think the profession on a whole is going through a very challenging and a very, very interesting times. I repeat, the profession as a whole is going through a very challenging and a very, very interesting time. Why challenging? Challenging because of two reasons. The first one being ourselves as chartered accountants. And I heard Parik Saab speak about his view about, what the institute should be doing, and that's very well noted, sir. But the fact is that anything that you do in the world starts with us first, unfortunately. Institute is an institute, it's a great institution, it's been around for several years and likely to be around for hundreds of years more. But the fact is that everything and anything that we do, it starts with our conduct first. Very, very important. I'm not saying the conduct is bad, good, ugly. I'm not trying to say that. What I'm trying to say is, as chartered accountants, are we able to hold our conduct very high on our shoulders and say that we denote public trust? Somewhere, I think there is a problem statement, and I don't think, I keep talking to students and say, hey, you know what, why are you doing chartered accountancy? I was in Surat just yesterday, and I have this tendency of asking questions to students as to, why have you been doing chartered accountancy? Why are you doing chartered accountancy? So in Nagpur, there was a very short girl who got up with her hand up and said, can I respond to you, sir? And I said, please. And she said, I'm doing chartered accountancy because ye sasta sundar aur tikau hai. Literally, she said it. Well, to me, it sounded like a Surf Excel ad, but is that the reason that the students that you have today are doing chartered accountancy? Look at the perception. Look at the perception. I keep telling our students that, my friends, you're doing chartered accountancy because that's the only course in the world which denotes public trust. My problem is that as members, have we even understood the meaning of public trust? Chartered accountancy denotes or synonym. A synonym to chartered accountancy is literally public trust. And I'm sure all of you, my colleagues and friends here, and ladies and gentlemen, when you go back to office, this is what you would probably tell your articles also, that chartered accountancy denotes public trust. My request to all of you is that the conduct starts at home. I have got a very small clip to show you. My mind was had a lot of clarity when I saw this clip, and I'm sure some of us here or many of us here would have probably seen it, so please do bear with me. But this is a very, very interesting clip. It kind of clears up our mind, especially from where we are and what is expected out of us. So can I request you to play the first one, please?
You see, you have standardization, obsessed with standardization, but हमारा क्या स्वादानुसार है? So एक स्वाद है द्वापर युग का, एक स्वाद है त्रेता युग का. So one is for the Treta Yuga, which is an earlier, more innocent age, and a later phase in the organization, which is dark, which is slightly more corrupt. Okay. Now, if I use the principle of dharma again, just to revise, you have got Z plus, minus 0, animal instinct, this is exploitation, this is empathy. Dharma is here, adharma is here. Now let's do a simple 2 by 2 matrix to understand the Ramayana Mahabharata. So you have rules on one side. Rules are followed, rules are not followed. Then you have the principle on the other side, dharma. Dharma is upheld, dharma is not upheld. Now look at the Ramayana. In Ramayana, dharma is upheld and rules are upheld at the same time. So you have Ram. So rules and dharma are aligned. Everything is about the other. Everything is about the other. Everything is about the other.
Even at the cost of oneself.
Even at the cost of oneself.
Almost always at the cost of oneself in the case of
almost always.
Yes.
So it's misery in the forest, misery in the palace.
Got it.
His opposite is the great alpha male, which somehow people seem to like today, tells you about the times, is Ravan.
No dharma, no rules.
No rules, no dharma. Your wife is my wife.
Right.
And I'm an animal. Even my son dies, I will not let go of my little toy. My brothers die, I will not let go of my little toy. That's Ravan. Now look at this same thing. Rules are broken, bending, and Krishna always bending the rules, breaking the rules. But the principle is intact. It's always for the other.
Okay.
Now let's look at the most favorite character, Duryodhana. He never breaks the rule.
But he's constantly violating the principle.
He's constantly violating the principle. He is holding the letter of the law, never the spirit of the law.
Okay.
This is the spirit. This is the letter. This is the belief. This is the behavior. He's a pretender.
Where does Yudhishthir fit in all of this?
Yudhishthira is someone struggling to be Ram. he moves from here to here. This is the journey of Yudhishthira with the help of Krishna. You see, his honesty is about rules. He's not realizing it's not about rules, it's about principles. Right. Mahabharata is the story of focus on the principle. You see, so when a woman is being disrobed, everybody is discussing legal matters. Is it okay or not okay to disrobe her? I mean, grow up. This is Bhishma and Drona watching a woman being disrobed, and they are supposed to be very educated people, and they are not doing anything.
This brings me to a very interesting issue. You said that the Ramayana comes from an older age, an age of more innocence. The Mahabharata comes from a darker age.
Yes. It's a more matured organization. This is a very early phase organization. Just tasted success. Everything is right. Market is right.
And the principles have just been created.
So it's exciting and new. People are not smart enough to subvert it yet.
Right. Here, in this stage, you've gone from principle to now a slightly more rule-focused organization.
The principles have been forgotten. Rules have become more important. So it's bureaucratic. Highly bureaucratic. Letter of the law. Spirit of the law is not there.
So I don't know what you get out of this, but I think to my mind, this is one of the most or the best statements that I could hear. It says, be like Krishna, 80-20, but principles should never be wrong, right? And that I believe is one of the most important messages for at least one of us, I mean, chartered accountants. It may not be for MBAs or lawyers, or I don't know, I don't care, but I care about us. So I'm saying that's one of the most important messages that we would carry from here. And let me try and extend this. We had a very interesting meeting, myself and the past President Nilesh Vikramsi. We had a very interesting meeting with the SEBI chairman in the earlier year, I think last year. And during the conversation, we kind of stumbled upon reasonable assurance. And mockingly, the chairman of the SEBI chairman said, what do you mean by reasonable assurance? In the economy that you have today, in the world that you have technology, what do you mean by reasonable assurance? My expectation is 100% assurance. Well, as a chartered accountant, I was never taught 100% assurance. We were never taught. Have you been taught 100% assurance? If it was to be 100% assurance, then it is not an assurance. It is true and correct. It can never be true and fair, unfortunately. It has to be always true and correct. But can you believe that somebody who's sitting on the highest paddle, somebody sitting as a chairman of the SEBI, and his expectation is, I'm not saying again right or wrong, right? What I'm trying to say is, his expectation is no longer reasonable assurance, his expectation is 100% assurance. Why? Because there is a change which is happening in the economy, there's a change which is happening in the way that we do an audit. So what I'm trying to impress upon you here, again, ladies and gentlemen, is while on one side the conduct is very, very important, the other challenge that you face today is the expectations of not only this government in this country, but across the world. The expectation today is if something goes wrong on a balance sheet, chartered accountants or auditors are hauled up. They're actually more than even promoters today, unfortunately, right? And I keep giving this example just to end this conversation. I keep giving this example about the Punjab National Bank. It was so interesting. They did not want to catch the chairman of the bank initially, right? No problem, he's a big guy. They didn't want to catch a director sitting there. No problem, again, those are big guys. They didn't want to catch the credit head of the bank. No problem, he's also a big guy. Then you have somebody who heads the treasury of the bank. No problem, he also happens to be a big guy. Then you have somebody who heads the SWIFT function in a bank. No problem, he also happens to be a big guy. Then there is a middle office in the bank. I'm not sure if you're familiar with, I'm sure most of us are here familiar with banks. There's a front office, there's a middle office, and then the back office. You have 20 people in the chain, but whom does somebody reach out to? An internal audit, who's the guy who's the most on the bottom of the chain, says, hey, you know what? You've not done a good audit. Unfortunately, for all of us, this is the situation that we live in today. Now, what do we do in a situation, in a scenario like this, is something that we'll all have to go through, and something we'll all have to think about as to what is the expectation, which we will again come to in some time. So I said that we have challenges, and we have an interesting times as well. So I kind of narrated the challenges to you. Let us understand the interesting times. I normally start my lecture by saying, unfortunately for all of us, audit and accounting is a dying practice. And that's where I started off from. I'm not saying this, by the way. I'm not saying that. I should never be saying this as a Central Council member because I'll never become a Central Council member again, for sure. The intent is, please do log on to the World Economic Forum website. If you would spend 5 or 10 minutes, please log on to the World Economic Forum website. You have artificial intelligence and machine learning coming in, which says that auditing and accounting is going to be the most impacted profession in the future. Most impacted. And I would again come back to you as to which part of auditing and accounting is going to be impacted. Of course, as a profession, are we not going to be there? Of course not. World will evolve, you will have artificial intelligence, machine learning, all of that. As a profession, we are likely to be there, we are going to be there, and we are there forever. But what is it that is likely to happen? So now for the next maybe 30 odd minutes, please do A, believe in what I'm about to talk to you, and B, please do reimagine with me some of the use cases or examples that I would probably show you on the screen here. And these are some pictures or some examples that I take, keep clicking, as I travel across the world in my role in terms of evangelizing something that I do. So here is the presentation for you. Can you push the presentation, please? Great. So this is a huge store in New York, Macy's, and they had this beautiful English word written there, believe. I thought it made a lot of sense and I clicked it. For a minute, I would want you to reimagine cities. It is said, and again, I'm sure you would have looked up on YouTube and WhatsApp and all of that, it is said that in the next 5 or 10 years, you would not have cities in the world. And what it means is you no longer have Mumbai, Delhi, or even Jaipur, of course, is a large city. You'll not have these cities. What you would have is tall buildings. Tall buildings with 300 floors, 400 floors. You'll have an entertainment center. You will have an education center, all of that, and be climate controlled. I said, what nonsense is that? I wouldn't want to believe this. How can you have 500? Of course, we've seen buildings with 150 stories and stuff like that. How do you have 500 floors, and how do you have it climate controlled for people to live in, and so forth? I happened to visit London, and just 2 hours away from London, there's something called as Project Eden. Very interesting thing. It's just outside the London city. So I'll impress upon you that if you happen to be there, please do take out 2 hours and go to that city. I went to this Project Eden, and I saw this huge 4 domes there. They are literally huge ones. And interestingly, they have all the 4 climates of the world that you see in different domes. And the domes are so large that you could actually walk into the domes. There are plants in the dome, there are birds chimping in, there are waterfalls in the dome. It kind of made me realize that climate control and probably living in a kind of control is just about already there. And I'm not joking, because on the left I keep telling my wife that I'll show you a picture because she happens to walk on the left hand side. So this is literally within a dome, which is climate control. You have all of this that you can see in the dome. For a moment, if you would want to reimagine our restaurant, on our way to this Project Eden, we were all very hungry. And we said, why don't we go and eat something in a restaurant? And we had a normal looking McDonald's restaurant there. When you walk into a McDonald's or any restaurant, where do you really want to go? Where do you go? Anybody? Like to go to a counter where you could order and where you could take the food and then start eating the food. We go in and we are kind of not able to find the right counter for us. But of course, what we find is a nice machine. As Indians, we've now, I think, matured, and we also see all of these machines, and we tend to order on these machines. So we said, okay, this is nothing new for us, so why don't we order on the machine? Why don't we pay through a contactless credit card and stuff like that? We pay that. But you still want to eat the burger, right? You still want to go and get the burger. Can you imagine that there is nobody at the counter? Why? Because the burger is actually delivered by a machine. And on the right-hand side that you see a lady there, she is the only lady in a 100-seater McDonald's restaurant. There's just one lady in a 100-seater McDonald's restaurant who does the cleaning, who ensures that the machine is not stopping, and the burgers are delivered to you. So very interesting. For a minute, I would want you to reimagine airports, and that is something that all of us on a daily basis are acquainted with. And this is an airport that you see, which is a Sydney airport, and it has got one of the largest the airlines there, which is the Qantas. When you would go there 2 years back, you would actually see 40 or 50 people trying to check you in. But if you happen to walk in today, There are only machines, and you put your own labels and you put your own bags, which is just about come in India as well. I'm not talking about boarding passes, but including your bags. And you know what? There's just one lady standing out of 50 machines that you have. In London airport, if you go for a British Airways, you'll not even probably see that one lady. You doing all that you do by yourself. 40 or 50 counters, again replaced by just one lady, standing to make sure that everything is going smooth. I would want you to reimagine shopping malls, for example. And if you would go to any shopping mall in the world, let's take a Sainsbury. I happened to go to a Sainsbury. Again, there were 40, 50 check-in counters. People were walking in, checking out quickly, and they're helping you to do that. Lately, when I went in there were only large scanners at the shopping mall. What? You walk in, you take what you have bought, you put it up there, and you walk out. And again, just one lady standing to ensure that everything goes through neatly and properly. Why? Because the scanning machines have got better, the scanners have got better, and so on and so forth. All across the world, what are people trying to reimagine? They're trying to reimagine, how do we make your lives better? They're trying to reimagine, how do I make a process, which is a complex process, a simple process? So can you imagine somebody actually reimagined a shopping mall and said, I don't even want a scanner there. Why does somebody need to go and put what he has bought there? Why does somebody need to even put a credit card there? And what you have is reimagine the reimagine, which is the Amazon walk in and walk out. I'm not sure if you would have looked at this at the YouTube. Have you seen this video on the YouTube? A couple of you. Right, it's interesting. So let me just shoot off the second video. We'll just cut it through the half middle way. Just trying to impress upon you is,
4 years
what
ago,
is somebody thinking?
We started to wonder, what would shopping look like if you could walk into a store, grab what you want, and just go? What if we could weave the most advanced machine learning, computer vision, and AI into the very fabric of a store, so you never have to wait in line? No lines, no checkouts, no registers. Welcome to Amazon Go. Use the Amazon Go app to enter. Then put away your phone and start shopping. It's really that simple. Take whatever you like. Anything you pick up is automatically added to your virtual cart. If you change your mind about that cupcake, just put it back. Our technology will update your...
So I'm sure you've got a gist of what I was trying to say. It's so simple. So what did somebody do? Somebody just got up in the morning and said, hey, we had 40 check-in counters before. We improvised the process and we took it to just one lady now and we put 40 scanning machines. Somebody again got up in the morning and said, hey, why don't we improvise that? Why do we even need 40 check-in machines, right? Somebody just walks in and walks out. That's an ideal shopping mall that you see. So pick up something, put it down, and the bill comes to you on your WhatsApp. So literally the bill here comes to you on WhatsApp. You don't have to keep doing your credit cards again and again, and the money goes out of your credit card automatically. That is convenience. Right? So all across the world, if you would look at innovation, there's only one common theme in all the innovation. Innovation means doing the same thing differently, but simply. Can we do the same thing in a different manner, but in a very, very simple manner? That's the expectation. Now let's go and talk to you about business. All of us here are acquainted with how technology is changing our lives. Let us try and see if it could spend 10 or 15 minutes on trying and understanding how is technology changing businesses. Most important for us as chartered accountants, and somewhere I think we lose this perspective, the understanding of business models is not as strong as we think it is in today's world. I don't want to pass a judgment or an experience on what has happened in the past. What I'm saying is our understanding on the business models of what you have today are slightly behind the curve because our understanding of technology sometimes falls through the gap. So let us just try and talk about 5 minutes about what is changing in the business. So let us reimagine power. All of us here, let us reimagine power as a business. You know, all of us would have seen this. All of us would have seen this. If you're traveling abroad in India, as you travel more, you'll keep seeing this more and more. What's going to happen? Anybody here? What's going to happen if this becomes a full-blown reality, which more or less it has become a full-blown reality? Power is likely to be produced by people like you and me. Power is likely to be produced. So you are consumers, you suddenly overnight become producers. So consumers are becoming producers. Now, if consumers become producers, and especially if it is power, what changes? What changes? And especially for chartered accountants, if I were to ask you, what would change? This is the flow. It comes, the power reading is done, it goes in, and then it goes to your accounting solution, all of that. Can I hear anybody who could talk about what is likely to change in a power company? Anybody here? Very quickly. We are selling power to power companies, excellent. Anybody else, please? There will be no need of power companies, which is an excellent one. Probably you'll not see the same power companies again, and that's a fact. But I'm bringing down that question to a little closer to what we understand and what we do as chartered accountants. Yes, please. Of course, global greening advantages, all of that is a given. I'm saying, let's bring down the question because we are chartered accountants in a conference here trying to understand whether auditing or accounting is likely to survive. So I'm saying, what changes here? We are earning. You know what? Interestingly, everything in the power company is likely to go through a change. And the first change is, how do I even read your meters? So you're going to have smart meters and net meters. Somebody said, we're going to sell power because you are going and putting back the power in the national grid, which means I'm consuming power and I'm also producing power. Right? I'm a consumer and I'm a producer, which means the old technology will not work. You have to have net meters come in. So the net meters walk in. What happens after the net meters walk in? Have you heard of CRM solutions? Customer Relationship Management Solutions? Have you heard of them? You know, large organizations have CRM solutions to ensure that you service your customers very well. Right? And these are, and one of the CRM solutions, for example, is Salesforce, which has actually become a $50 billion company today, as we talk. They have got stations on their name in San Francisco. They've got buildings on their names. And what do? They are simple CRM solutions. Anyway, so you know what? The CRM solutions are likely to change. Why are they likely to change? Earlier, they were never used to have 400 million producers. They used to have 400 million consumers. Suddenly, there are 400 and 500 and 600 million producers. You know, it's okay if you're a consumer for me to call you up and say, Aaj power nahi aayega 2 ghanta. Why? Because we are going through a service. It's okay for me to call you up and tell you, we're going through a service. Sorry, ladies and gentlemen, you will not get power for 2 hours. You're still okay, right? But if you're producers of power, and if I call you up and say, hey, you know what? I'm sorry. You will not be able to produce power for the next 2 hours. You're not going to be okay. Why? Because you're losing money. You're literally losing money. Now, let me get you back to accounting in the power company. And what would change in accounting? Anybody? What would change in accounting in this power company that we're talking about? Wonderful, wonderful. You said it in one statement. You know, the SAPs of the world and the Oracles of the world, forget about tallies of the world, but the SAPs of the world and Oracle of the world, they are industrial accounting solutions. I repeat this, they are industrial accounting solutions. If you look at SAPs and Oracles of the world, most of the time, the billing is not done through the solution. Most of the time, the fixed assets are not maintained in the SAP solution. It is maintained in the periphery solutions, either maybe Excel sheets or you have some other solutions. And then they send a feedback into the SAP and Oracle solutions. SAP and Oracle solutions are not used to having 700 million producers or vendors. Today, when you want to apply to any company, you have to register yourself as vendors, right? You go through a process of registration. Suddenly, there is a complete reverse, like he said, and 800 million vendors are going to be generated, and you also have 800 million consumers. Is that accounting solution even ready to do something like this? My gut feel is the accounting solution is nowhere closer to handle these kind of volumes, which means the volumes would have to be handled outside the system. So literally, and we could go on through the entire day just talking about power, what is likely to change in power for a chartered accountant on a daily basis, what we do. Let me not take too much of your time. Let me get closer to home in terms of what's likely to change in the bank. You know, I keep saying that you would probably not see a bank in the next 10 years. And people would smile and laugh at me saying, why are you saying this? Earlier, I thought you would probably not see a bank in the next 10 years because you have crowdfunding. And the Reserve Bank of the country has also come out with a document on P2P lending, for example. So I thought that crowdfunding would take away the banks that you see in today's environment. Interestingly, in just last 1 year, it is no longer crowdfunding, it is no longer the bank that we used to see, but it is actually API banking. Have you heard about API banking? Anybody here who's heard about API banking? Well, guys and girls and ladies and gentlemen, if you have not heard about API banking, and especially if you do concurrent audits and statutory audits for bank, my request is please go back home and look at what API banking is all about. What it really does is, if you have audited Finacles of the world and Flex Cubes of the world, these are core banking solutions. They sit in the heart of the bank, in the lowest possible room in a data center. Why? Because that needs to be protected. There are consumers, there are customers there, there's data there are balances there. They don't want to open it up, and you go in and you audit all of these transactions of what is happening in a branch. But if I were to give you an example that banks, let me actually ask you first, and maybe that would probably set the tone right. How do banks make money? Anybody? Very quick one. Interest difference, so interest arbitrage, you take it an X and you put it in X plus 1 or whatever and you do it. Anybody else? Dividend services? By using your own money. Well, interestingly, guys and girls and ladies and gentlemen, banks no longer make money from interest income. Banks actually make money from fee income. Right? No longer. One account goes NPA, the entire interest income column goes down. So if you look at the balance sheets of the bank which have got better valuation, maybe his treasury income would have done a little better for him that year rather than his interest portfolio, right? So it is the fee income. Now, how do the banks make fee income? By providing services to you, by providing payment services to you, providing forex services to you and all of that. Interestingly, one by one, if you were to look at all the banks, one by one, all of these interesting services which make money for the banks are actually going out of the hands of the bank. So payment, for example, used to be one big thing that the banks used to make money out of. It's no longer run by banks, it's run by companies like Paytm, right? And in China, for example, the payment volumes are more than $3 trillion. And a Safaricom, for example, a telecom company in Africa, is actually larger than, in volumes of transactions, larger than all the banks put together in Africa, interestingly. Right? And they make what out of that? Probably they make a penny out of a transaction. But pennies would eventually become dollars and they eventually run into millions and billions of dollars. So again, an example is, I don't know if you've heard of a company called Virgin Mobile. Have you heard of a company? Wow, everybody here has heard of the company called Virgin Mobile. You know, interestingly, Virgin Mobile does not even have a telecommunication license. But everybody has heard of the company called Virgin Mobile. Virgin Mobile is an MVNO, which means it buys the airwaves from a telecom company in bulk and sells it. Why is Virgin Mobile able to do that? Because Virgin Mobile is very good in providing services. Their entire client relationship, the look and the feel of the entire way that they service you, if you walk into any of their shops abroad, they're beautiful. So Virgin Mobile is a big telecommunication company, mostly without having a telecommunication license. How interesting is that? Similarly, what I'm expecting the banks of the future is that when you have the API banking, you will have more fintechs coming in and taking away the share of the banks in which they are very, very good. And I do have some slides and showing examples of that, and if we have time, we'll probably go through that. Right? Today, a lending solution is not run by a bank. A consumer finance book, which is typically a lakh of rupees loan, you know who's running it? You have AU Finance here, they're agile, they're a smaller bank, they want to lend to you faster. So it's interesting, today they run a large algorithm on your Facebook profile. Earlier, how would you get a loan? If you just wanted a 1 lakh rupees loan, you would walk into the branch manager's cabin, you'll say, sir, I need 1 lakh rupees loan. And the branch manager will probably look at you and he would have a power of 1 lakh of rupees, I'm sure. Even the small branches in the PSUs have a power, right? He will look at you, then he'll say, okay, why don't you give me maybe your personal account, balance sheet and all of that. And suddenly in 2 hours or 5 hours or maybe 2 days, he turns around and gives you 1 lakh rupees loan. It's more to do with gut feel of the branch manager. It is more to do with what accounts you've managed. Today, that 1 lakh rupees can actually come to you in 1 minute. Why? Because somebody is looking at your Facebook profile. So somebody looks and scans your Facebook profile with algorithms to say, hey, what is Anil Bhandari? What is his personal quotient? What is his family background? Where does he go to eat food? Does he drink too much? Does he party too much? And the algorithm comes and says, no, he's a safe guy to get a 1 lakh rupees loan. Anyway, 1 lakh rupees is a risky loan. And they happen to give it to you in 2 minutes and stuff like that. So I'm saying this ecosystem, we believe would take a lot of time, but unfortunately, as the world progresses and we get mature, this time becomes shorter and shorter, and the changes become very rapid. By the time that you realize the changes happened, the changes actually already happened and hit you, right? So it's going to be API banking. What it really means is every piece of the bank is going to be open, and their fintech company is going to do away with 50-60% of the work that the banks do. If you ask me, where does concurrent audit sit in here? I have no idea for you. It completely changes the connotation. But if you ask me, how important is it going to be having controls in here? Absolutely important, absolutely important. And we'll probably talk about the opportunity a little later. But API banking, this is a slide which is actually borrowed from a large consulting organization, just to give you a glimpse that I'm not the one who's coming and saying this is likely to happen. There are large McKinseys of the world and Bain's Consulting of the world who are talking about it. So if you see this, this is very, very interesting. Every piece of a bank, what it does is on the left-hand side. So you have wholesale banking, retail banking, fraud monitoring, co-branding, debit cards, credit cards, and everything that you see in a bank could be divided into front office, middle office. Every function of the bank is on the left-hand side. And on the right-hand side, what you see is very interesting. On the right-hand side, there is one logo in the world, at least, minimum, who is actually doing that function very, very well. So I repeat, every function of a bank, every business of a bank can be broken up on the left-hand side, and on the right-hand side, there are these companies in the world who are doing exceedingly well. These are not just examples. They're doing exceedingly well in trying to run these transactions for bank, and just about every business of the bank is here. So, well, I asked you to reimagine a bank. To me, finally, how a bank would look like, it's going to look like a big canvas, and the canvas is going to be blank. And for example, I have my saving account with ICICI Bank. I will actually log on to a nice technology platform. I'll say, hey, you know what? They didn't give me a good service yesterday. Why don't I drag and drop my saving bank account and put it into an HDFC bank account? I don't like this ICICI. I mean, I'm just saying the names for the sake of saying names. So please don't hold me off saying names. All banks are pretty great in this country. So I just drag and drop it somewhere. I don't like the loan service, for example. I just drag and drop my loan, my entire housing loan, my personal loan, or my wholesale lending or whatever, and drag and drop it. Looks and sounds very simple, but what is required to be done in the back end is you have to have APIs which are able to settle your account with one bank and create another account with another bank. That is where the technology is going, and that is what the expectation, at least some of us have, is likely to happen in the next 10 years. Bank is going to be a canvas. So probably one more example. Why don't we reimagine telecommunication? Now, when telecommunication came in, it was such an exciting story. You know what they made money out of? Anybody? Sorry? Charges? Anybody else? They made service out of voice. Voice was their business, right? You pick up the phone and talk to people, it generated call data records. They made money out of voice. And the voice was probably 20 bucks a minute or 30 bucks a minute, maybe in 1999, 2000, 2001, and so on and so forth. And then came in VAS services, right? So you had value-added services, something like an SMS or something else. And 20-30% of the revenues of the telecom companies shifted from voice to VAS services. As chartered accountants, I'm not sure if anybody is here doing telecommunication audits, but look at the understanding. You have call data records generated in millions and billions. One company generates more than billions of call records. If you were to do a statutory audit of a company like this, you don't even have a bill, for example. Because why? 99% of the business is a prepaid business. Only 1 or 2% of the business across the world is now a postpaid business. So you don't even have a bill to look at. You need to understand how do you marry the call data records, total it, and come back and say, yes, this company has an 80,000 crore turnover. I don't know if you have that understanding or not, but keeping that aside for a moment, I'm saying how is the business transforming? They transformed from a voice business, it transformed into a VAS business, and then finally one day, one of the richest guys on this side of the world comes up and says, hey, you know what? Voice is a democratic right. I want to give it to you free. Right? So Mr. Ambani walks up and says, hey, you know what? He didn't realize that voice was a democratic right even before, but voice is a democratic right today, and I like to give it to you free, guys and girls. Very good. They said, data is the new oil or oxygen, so I want to give it to you for $10. $50, you enjoy as much data as you want. So our mind would rush to the fact that, is data the new business? Interestingly, the world has moved so fast in the last 1 year that it is no longer voice, it is no longer VAS, it is actually no longer data also. Why? Because the data is just making you $10. The data is just making you $10 in a month. It is that ARPU is not sustainable. And you see that on the paper today. You see it in the newspaper today. Telecommunication has become a business of content. I repeat, it has become a business of content. And if you would want to look at it, please go and pick up the balance sheet of Reliance Industries, and maybe on the 50th or the 60th page, you will realize that Reliance has gone and bought all the content companies in this country. They own CNBC, they own TV18, and the list is long. And they've been acquiring in the last 5 years. Why? Because it's no longer going to be a business of voice or data. Voice or data is given to you. So what is going to happen to a lot of these industries? These industries that I spoke to you about are going to become infrastructure industries. What do you mean by infrastructure? I have got a license, I have to maintain my CASA, I will do that because it's difficult for a new bank to come up and do that. So it's a pipe. Now, whatever I can run around it, I can give it to the fintech companies. A telecommunication company is likely to become, again, an infrastructure company. Why? Because it's laid down the pipe takes gigabytes of data, it's an infrastructure business. The smart guys are going to run into content business. And if you see Netflixes of the world and all of that, that is content business, and that is likely to make you more money. So I'm saying for a moment, just to stop our examples here, we reimagined power companies, we reimagined maybe a bank, we reimagined maybe a telecommunication company. I would impress upon you that you should go back and reimagine almost all businesses that you see here. Almost all businesses. Why? Because the way the business is done, the way the money is made is completely different than what you saw in the last 10 or 20 or 50 years. I don't know if you've seen a very old, I do see some senior chartered accountants here. I don't know if you've seen an old movie of Tom Cruise, which is called Cocktail. I don't know if you happen to see that. If you happen to see that, one of the scenes in the bar, Tom Cruise says that Fugo binders make more money than shoemakers. You know what a Fugo binder is? A Fugo binder is the plastic wrap that you see on your laces. Towards the end of your lace, you have a plastic wrap which is called the Fugo binder. He said the Fugo binders make more money than the shoemakers. And that is what the reality is. Unfortunately, sometimes we struggle to understand a business model, and the business model is completely different. So, having said that, consumers are becoming producers, and I have a lot of examples. Uber is an example, Zomato is an example. You keep calling it, and consumers have become producers, and people are coming closer to your doorsteps. All businesses will change. Am I right or wrong? All businesses would change. I have a very interesting analogy here. I'm not sure if you've heard of this. It reminds me of an example that, you know, if we get up in the morning in 2030 maybe not 2020, but 2030, there is a smart watch which actually logs on to Google and checks, hey, you know what, today the traffic is a little low, let this gentleman sleep a little longer. And when the time is right, it sends a signal to your bed, and the bed vibrates, right? It's not like your mother and father coming and saying, hey, good, wake up, you have to go to schools or colleges. So the bed vibrates. And when you get up and then you go and stand in front of the mirror, and the mirror scans your body, and believe me, I've gone through these scanners personally. The mirror scans your body and says, hey, you know what, you've eaten a lot yesterday, you need to run 10 minutes extra on your treadmill. It sends a signal to the treadmill, you walk up the treadmill, by the time you finish your treadmill, the treadmill sends a signal to the geyser that this gentleman likes a 20-degree hot water. By the time you finish your bath, it sends a signal to the coffee machine, please make a cappuccino. By the time you finish your coffee machine on the table gives you all the possible news, and by the time you finish all of that, it tells your car where to drive you. Now, I would have probably sounded a little dramatic when I'm saying this, but I don't know if you've kind of got the underlining statement here. Anybody who's got the underlining statement of what I'm trying to talk about? Anybody here? Wonderful, everything is going to change. Will you see the same watchmaker? You can't see the same watchmaker. Will you see the same bed maker? You won't see the same bed maker. Will you see the same mirror maker? No, you can't see it. You can't have the same geyser maker. You can't have the same car makers. And if you don't like this example, look at Tesla, the third largest car manufacturer. Look at Apple Watch, the second largest watch manufacturer in the world, right? I didn't believe all this 10 years back, how much ever deep that you were in technology. I thought the time is still ripe. It's going to take a lot of time for people to come in. But suddenly you realize that everything has changed overnight, because when it finally comes to us, it's already hit us, it's already finished. What we're doing is already completed and done with. So my question is, this is very, very interesting. Literally, you're likely to get this free. What if I were to tell you that I want to give this free to you? We will be more than happy to take it. This eventually in the next 5 years is likely to come free to you. Know why? Because data is generated out of this device. It is where you do your transactions. But let me try and tell you, if all of this changes, would auditing and accounting change finally? No? Are you sure? How is it likely to change? Let me talk to you about just 5 minutes on how accounting is likely to change. Let's not get to auditing because it's too closer to our heart. We are very emotional about auditing, right? Let's talk about accounting. Maybe we don't kind of hold accounting to the same level as auditing. So let me take 5 more minutes on accounting. How is accounting likely to change? So the next question is, would you see the same accounting solutions that you see today, or are you likely to see some different accounting solutions tomorrow? Different. Why? Because I showed you something which is different. So very interesting again. Before I go there, I have a very interesting slide, and I think I might have kind of wrongly sequenced this. But this is a very interesting slide. All that I spoke to you about, I have not generated it, I have not created it, just for the record, right? Please log on to World Economic Forum, and you're likely to see all of these interesting stuff there. But I want to show you one slide. It talks about digitalization in businesses, and it talks about the rapid digitalization in business. So I'm not sure if you're able to see all of that, but it's media, health, logistics, automotive, electricity, consumer. This only tries to tell you that every business is changing. I'll just take one example for the sake of time. And that example I would want to take is, just give me a minute, and one is, if you see this, usage-based insurance. Have you heard about usage-based insurance? It's a very interesting concept. So when I'm saying that every business is likely to change, I'm just trying to hit on the insurance business now. What is a usage-based insurance? You buy a car, and I'm sure everybody, and especially chartered accountants in Jaipur, are very rich because the president came and said, you did more than 3,000 crores worth of business in the morning, and I'm sure there are lots that happen in Jaipur here. Assuming that you buy Mercedes-Benzes and BMWs and all of these cars, you pay a huge amount of money on day one when you buy a car, right? So 3 lakh rupees goes out of your pocket. There is a set of business who are already doing this as a business model. If there's somebody new who wants to come and disrupt this business, somebody comes and says, hey, you know what? I don't want your money up front, my friend. You drive a car and I will charge you money. It was not possible before. It's possible today. How is that possible? It is called usage-based insurance. So when you drive your car in the morning, you will get a bill on your WhatsApp saying, 10 rupees, you've driven your car, please pay up your insurance. Interestingly, if you stay in a city like Mumbai, and if through an artificial intelligence it will know, oh, his office is in a pin code, say 59, which has a lot of accidents, so in the morning they'll send you a bill of 15 bucks. Then it also knows that your driver is driving a car, his background is not good, so maybe 20 bucks today, right? If you're driving, it could be 10 bucks. I'm not saying it for the sake of saying it. All of these are pilot projects happening as we speak across, right? And that's just insurance. Again, if I were to take you and extend that question, what's likely to change in an insurance company? Everything is likely to change in an insurance company. How does insurance company onboard you? They do a KYC and they onboard you. That's likely to change. How do insurance companies do underwriting? They do an underwriting based on the car that you bought, based on the background that you have. Now they want to do it pay as you go. Underwriting is likely to change, right? You pay a full amount to the insurance company upfront. Auditing is likely to change. Your accounting standards have to look at it differently. Today, you're going and paying them as you go, right? Your CRM solutions have to change. Your backend has to change. There is no going to be any PDC factory. Why? Because you don't give them checks and so on and so forth. So I could again keep talking to you about just about every business. Sorry about this. Right, so let me come back to you now on the topic of whether accounting is likely to change. How much time do we have? Okay. All right, lovely. Well, I have prepared so I can keep speaking. That's not the problem. But anyway, we'll come it as it comes. I'm reminded of Pramod ji's example yesterday in Surat. So I don't want to get into that situation. He gave a very interesting example in Surat. He said, you know, I started speaking, and then there is even towards the evening, there were only 15 people already. Right? And he said then when he started speaking, he speaks well. He started speaking, one guy left, second guy left, third guy left. There was only one guy who was there. And he said that since I'm prepared, I'm likely to speak for the entire 1.5 hours. And finally, I think you went and said thank you to this guy who's sitting right in the auditorium. So he said, don't thank me, I'm the next speaker after you. So very interesting example that he gave. So I don't want to run into that situation, but having said that, let's just reimagine accounting for a minute, right? I believe that you will not see the SAPs and Oracles of the world. And I did mention to you that most of the accounting that happens today actually happens on periphery, right? So I'm not sure if you have encountered this. When you go in, the GL is coming out of maybe these large solutions. But these sub-ledgers, a lot of times, are not in this GL. Let me take an example of a bank again, because all of us are so conversant with the bank. Housing loan. Hello, Prakashji, thank you. I'm nobody's auditor, just a speaker here. Anyway, what I'm saying is, how does a sub-ledger accounting done if you are in a bank running wholesale banking? Have any idea? Anybody who's audited wholesale banking transactions in a bank? You have a separate accounting system, right? If you were doing retail lending, you again have a separate system which handles retail lending. If you're doing credit cards, you have a separate system which is handling credit cards. If you have co-branded cards, another system. If you have treasury is again a complex animal, a completely different system. The income of the treasury, the way that you account for the income, the way that you do an entry is not a part of your SAP system or Oracle system. And even if it is part of your SAP and Oracle system, they are not geared up to handle every piece of transactions and entries that you do, right? So you have literally 200 or 500 applications, and sometimes in a large bank you have more than 2,000 applications on the periphery. And you do a lot of work around the periphery, and then in the evening, all the sub-ledgers are totaled, and a journal entry is then sent to an interface in the SAP system, and that is how you tally up your accounts at the end of the day, and then finally the balance sheet comes out. But the customer data is somewhere else, and your GL is somewhere else. 80% of the time that you spend is actually spent on periphery, including auditing, 80% of your time. Now, let me try and take this example to the lower level. We do tally on a daily basis. I'm sure, I don't know how many maintain fixed assets in the tally books itself. Sometimes if your client is larger with 50, 100, 200 crores and the components are really small, you'll end up doing